stocks looking to regain momentum after giving back some of their sharp gains from Monday. And your next guest says he's seeing a number of opportunities in some big names set to ride a further rebound. Gregory Branch is the managing partner at Veritas Financial Group. Greg, thanks for being here.
Yeah.
So let's begin. Futures obviously up today after yesterday's slide. What do you make of it, and where are the opportunities in the day ahead?
Sure, Frank. So a couple of months ago, the opportunity was pretty obvious and easy to recognize. We had very concentrated market breadth, and we had valuations that were just screaming out to us that this is way too cheap. But since November, over the last 3 months, the valuation ground has largely been made up. So the question is, what do we do when the multiples are actually right? And when you look at the bank indexes, for example, they're up 50% since November. Lots of cyclical sectors are up in similar fashion. And so when the multiple is just about right, when there's not an easy opportunity in getting back to an average multiple, the challenge is to take out our stock pickers toolkit and look for, on the other end of that multiple, where we see earnings to be underestimated. Largely, that will often articulate itself in stories, in themes, in multi-quarter catalysts that we can articulate and pin our hats on. And I see a number of those that are developing. On the one hand, you referenced the job reports. Well, we still have about 11 million jobs to make up. And while we have had a heightened savings rate, that's largely been concentrated in the upper socioeconomic groups. So I like retailers that are value plays for the consumer that lend themselves to budget shopping, in particular in that segment, which includes names like Ross, TJ Maxx, Walmart, and Target. I like those that are also attached to another theme, which is e-retailing. And so e-retailing's gained a decade worth of share in the last 12 months. And two retailers in particular, Target and Walmart, you've seen the results that they've just reported. You've seen that they've beat on a number of metrics. They're actually investing in the e-retail more so than their peers, not only just in terms of their capabilities from the website, but also their fulfillment is superior, their delivery is superior, and they're taking those learnings and applying them back into the storefronts as well.
So, Greg, I mean, I think investors agree with you. Consumer discretionary up 41% this year, one of the best performing sector in the S&P. Actually, I take that back. Yeah, it is. Sorry about that. Had to take another look at those numbers. Another well-performing sector is financials. I know you're very bullish on a number of big banks as well.
Right. And so I'm very discriminating when it comes to that sector. Again, the indexes are up 50% since November. And so I'm looking for a safe haven. I'm looking for that earnings underestimation on the part of consensus in the larger platforms. And so last time around, when we came out of the great financial crisis, it took about 10 years for rates to peak above 2%. And we've had some promising signs over the last few days, over the last week, but I'm not sure that that's lasting, particularly as it took us last time around 10 years for rates to peak. Now, on the credit side, we started provisioning at around 4%, 2008, 2009, and that dipped below 1% by 2012. So we see credit to recover faster than we might see net interest margin. And so that advantages players who can make money outside of those traditional commercial banking activities. So the players that have trading, that have issuance, that have advisory, that have strong capital markets and wealth management. And that naturally favors the JP Morgans, the Goldman Sachs, the Morgan Stanleys of the world. So I would continue to look to those names, particularly as we've seen they've started to release their provisioning. So we still have yet to see those pesky NCOs, but at the same time, we know that by their releases, that they are already well capitalized to handle what they see will be their burden in the back half of the year. And I expect that at least to continue to be a tailwind along with that capital markets activity.
So, Greg, we're almost running out of time. One more question. I have to ask you about Wall Street bets, the Reddit trading revolution, whatever you want to call it. What do you make about what you saw with rocket companies yesterday?
So this is something I don't really have a lot of empathy for either side of this debate. On the professional side, right, we're the professionals. And so to the extent that we're going to cry about market manipulation, we have a choice whether or not we're going to be active in those stocks or in those markets, or whether or not we're going to withdraw. And on the retail side, I think we have to know, and I count myself as a retail investor to some extent, certainly for most of my life. We have to know that there is an information disadvantage. And
Greg,
so
I got to cut you off. The show's almost over.
Sure.
But the fact that you laughed about it, I think you're one of the few people on Wall Street. We appreciate your time.
Frank,
Thanks
always
a
a pleasure, my friend.
All right, that does it for us here on Worldwide Exchange. Squawk Box up next.